performance which is in 2021 with a company whose performance on your table is from 2020. There's a huge 1-year gap, right? So it means date must be mentioned on the report as well. Plus, the information should be of similar nature, so that if I am comparing my company with Singaporean firm, and Singaporean firm is comparing my company, which is in China, so how they can compare? Which means they must have some kind of standard language names, right? Standard procedure. It's not like that we can not compare yuan with the Singaporean dollar. So you need to convert your, like there are different methods for that one. So just you understand that, right? Comparable means information must be comparable among the business as well. It's not like that you are comparing apple with pear. Comparing apple to apple, peer to peer, right? Verifiability. It should be verifiable, accurate, reliable. If I write down that, okay, I paid you $10,000 as a salary, do you have a backup claim for that? Do you have receipt? Do you have any kind of proof? Must be. If somebody asks, you are able to provide. Timeliness, it must be on time so that people can make decisions. Right? It's not like that. This is 2022 and you are publishing your accounting reports of 2019. After 2 years, you are providing data to outsider. So that data is worthless, right? Understandability. The data should be in that language which can be understandable by even those who know little about accounting. Right? Information sufficiently transparent so that it makes sense to reasonably inform user for the information. Reasonably informed, not like people who have no idea about accounting. Even if you have idea of the accounting because you are in bachelor's, you have a basic accounting knowledge, even you can read that. You don't need to be expert or have to do some chartered accounting stuff or CPA or something. Even you can understand what does it mean by that. So we will learn about that, different terminologies. Here we go. So now the cost constraints are, you must apply the accounting strategies or accounting system with cost and benefit perspective. It doesn't mean that if your business is small, your company is small, and by employing the accounting standard, the cost of accounting standard is too high. For example, you're a very small company and your all accounting staff is of CPA, chartered public accountants, whose salaries are in at least $20,000 a month. And by applying the accounting standard, your cost is too huge, your profit is basically becomes negative, right? So you need to see the accounting standard with respect to your company as well, right? So that you can afford it. If your company is big, of course, you will be very strict about accounting standards. You hire knowledgeable people, right? So assumptions, more or less, we already talked about these assumptions, but now let's go through with the jargons, the language of accounting. Number one is entity assumption, which means business is separate, owners are separate, right? In the eyes of law, the company has a separate entity, a separate person. It can own property from on its own name. It can sue on its own name. It can open a bank account with its own name, right? And owners can open their own bank account with their own name, right? Continuity, we also call this going concern assumption, which means we don't know the business, end date. We don't know. We can have a reasonable assurance about personal life. Okay, this country's people, have average life 40 years, 50 years, 60 years, but we cannot say that this business have a life of 10 years, 20 years, 30 years. So we do have companies who is a century old, 200 years old, 300 years old, right? The Nestle company is more than 150 years old. Coca-Cola company is more than 150 years old, at least 130 years old, right? So we say that we cannot say for sure that what is the life of the business. It's a going concern. If their owners dies, that doesn't mean that the business died. So those who set up the Coca-Cola company or those who set up the Nestle company, they are for sure they are died. They died, but business remained the same, right? So business don't die, owners may die because they can transfer their ownership to somebody else, but business don't die unless there is some poor financial condition and business run into different kind of problems and the business itself announce that I am no more, right? Historical cost principle. Historical cost principle is that the things that a business own, which we call that assets, it must be recorded, it should be recorded on actual cost. If business is set up on 1980s and business purchased a land and that land was worth of $200,000, but in 2022 that land is now $22 million. So business should record on historical cost principle. Business purchased this land with $200,000. That's it. So no matter this land is right now right now of 22 million, right? Stable monetary assumption, monetary unit assumption. So effect of inflation is ignored. So it means everything should be recorded based on the currency that is on which the in which country the business is situated. So if Apple company is in China, he will report its earning. It will report its accounting reports on yuan basis, right? If it's in America, it will report in dollar basis. If it's in Japan, it will report in Japanese yen, right? If in Russia, it is in ruble. Right? In Mexico, it will be in peso, Mexican peso, right? So that's for your, just pause the video here. So those who are not attending the lecture today, just pause the video and read it by yourself here, just for your information. Okay, let's move forward. Here we go. Just pause the video and read it by yourself. Okay. So now our third learning objective is apply the accounting equation to the business organizations. So before going into that, let's have a 10 minutes break and then we start again. Okay? So meanwhile, I'm going to be stopping the recording. Okay, class, welcome back after a break. Let's move forward. We were discussing about our third learning objective, applying the accounting equation to business organization. Let's just talk about that. So the accounting equation is assets is equal to liabilities plus owners equity, right? Assets is equal to liabilities plus owners equity. So if we have assets 1,000, we have liabilities 600, it means 400 is our owner's equity or stockholders equity, right? So for every business, whether it is proprietorship, whether it is partnership, LLC, and the corporation, accounting equation remains the same, right? And what is the accounting equation? Assets is equal to liabilities plus owner's equity. You can rearrange the equation and you can find out How much is the liability if you are given the two assets given, liability given, you can find out the equity. If equity is given and assets are given, you can also find out the liability as well, right? Let's move forward. Now, we talked about the equation, but we haven't defined what are the assets. So assets are the economic resources that a company have. So this is not just ordinary resources, this is economic resources. Pay very close attention here. Economic. What do we mean by economic resources? It means all those resources a company has and it has some monetary value. So a classic example of economic resources, you are watching my lecture on YouTube. It's free. Yes, you can access that, right? But you are watching also online here, right? At the moment right now here, but you paid for that, right? So this is economic resource. So the your mom's services for you, cooking food, cleaning your clothes, you're managing the house. You don't pay money to your mom, right? For the services. Is that a resource? Economic resource? No. But if you hire a maid to do the same, cooking for you, do your laundry, clean your house, then that is economic resource. Oh, and another simple example is that the air you breathe. Did you install any air purifier at your room? No, then it's free. If yes, it's not free. You are paying for air purification services. And then it is economic resource. Or in summer, you're having AC, air conditioning in your house or in our class. So that is economic resource because we are paying for the cool air, chilled air, right? So a company possesses the resources, yes. Some of them are free, like sunlight is free. But is that a resource? Economic resource? No. So all those resources a company have, for example, chair, furniture, building, land, plant and machinery, all the stocks, goods,